Hello traders, Jason here with SwingHigh.com. It is Wednesday, August 25th, 2010, and after a long break, I am back and ready to do some more analysis for you guys. Basically, what we have here, I'm looking at the SPY, which is the S&P 500 tracking ETF. Back in early May, we had the flash crash, and on that one day, almost all of my positions, except for one, got stopped out. After that, things just really didn't look good. Volume was huge on that day. The next day was bad. Basically, after my positions got stopped out, I was sitting almost completely in cash. And while the markets crashed, I thoroughly enjoyed watching it and not trading. So basically, I had an entire summer without trading, and the markets have been flat to negative during that entire time. So right now, what do I see? I see a potentially range-bound market. If we stop here at 102 and come back up, we could trade between the 114, 115 area and 102 for the next couple months. At the same time, I have a bearish bias on the markets for a few reasons. We had a nice uptrend going in the S&P until we came to these highs up here at around 122. And that uptrend is clearly broken at this point. Right now we have the makings of a descending triangle. Some would even call this a double top right here. We have top, bottom, top. If we break that, that could be a weak double top formation. But we do have the beginnings of a downtrend. Let's see. We have the 200 moving average here in maroon, and we have the 50 period moving average in orange. And as you can see, they are kind of light, but the 200 or the 50 period moving average has broken below the 200 period moving average, excuse me, and that's what's known as a death cross. That is that could signify a significant change in trend here to the bearish side. However, we could just see some choppy action as these moving averages haven't really separated yet, and they're kind of flat right now. So all of these moving averages are consolidating, which makes sense. Volume has been dropping off a little bit, which also corroborates a consolidating market here. But basically, right now we're testing the 105 area as support, which should be a pretty significant support area. From there, if we break below 105, we should get a test of 102, and with a break below that, man, look out below. Our next support is going to be 100. Volume is picking up on the down days. The MACD is turning negative, and the RSI is also relatively weak. So that's some broad market analysis. I'm going to look at some relatively strong stocks now, just real quick. Take a picture of this and how you see that the markets have sort of turned around and are heading negative. What we have here is PTP. This is a much broader time frame than the last chart I was looking at. I just wanted to show you that we have this huge rising wedge on PTP. But recently, price has been hanging up here on the higher end of this range, and that is bullish. Yes, we have a rising wedge, but it's also relatively flat right here, so this could be considered a weak ascending triangle. A breakout above 40 with, well, in all of these cases, I would only trade these long if the broad markets turned around and looked bullish. But basically, I'm just watching this one because it's relatively strong. I'm also watching BAP. As you can see, there's an ascending triangle or a high base going on up here. I'm watching FOSL, which has a nice bullish pennant formation, and it actually looks like it might start breaking out soon. Let's see, MMP, which is also a nice bullish pennant or symmetrical triangle. Open, this one's a little interesting. I just like this fact that this range has been so nice and strong. Basically, we're pulling back now, but a bounce off this lower support line could be a decent entry on that one. Let's see, do we want to talk about this one? Yeah, UGP, we had a nice ascending triangle or high base breakout, and now we have some bullish pennants. Thanks for being a part of SwingHigh.com.